Hey traders, Parker here with another indicator, actually a bundle of indicators. I actually, excuse me, set this up to be a bundle. The indicators that you're seeing on the screen are the ATR range with Fibs, the Vwap deviations, my version of it, and the signals indicator and a relative volume indicator. But this one has ATR involved in it as well. To give you an idea, if you look right here, this ATR matches this ATR up there. This stock is AI something, I can't remember the rest of it, but it has something to do with artificial intelligence. But for the most part, I had this set on 12 bars. So it's looking at the average of the ATR average true range of 12 bars. This is set to 16, as you can see right here on the daily for the volume and the ATR. But you can change these periods for this one right here. But these will always be the current ones on the whatever screen you're on. So for the most part, for 16 days, you have an average move of $1.88, and that's what you have right here as well. The high low range for the stock, if you take the high minus the low, is $5.72. So that's 304% above its regular average true range of $1.88. You have the period change and the actual period change from the close. Here from the close, you can actually adjust this to be from the close or the open. And you have the percentage as well. So this stock is up 18%. You can see it also right there. You see the same information. I put it in there. You didn't have to have this. You can actually cut this label off and just look right here. But I liked it right there, and I put it right there. But this difference, it just shows you the difference between the hollow range and the ATR. If it's above 100, it'll be magenta. If it's above 70, it'll be yellow. Is warning you, and if it's below 70, should be just either gray or white. But for the most part, I'm gonna start taking some of the indicators off and start showing you some of the features of the indicator. If you haven't already watched my video on the ATR, but I'm gonna switch this down. There's a video on the ATR. I'm not gonna go into that much depth in this, but for the most part, it tracks the average true range from the close as your 50 or your base, that it pushes out the average true range. There's inside fields. These gray dots are the inside fields, and they're set to 7. Where is it? Here we go. You can actually adjust those inside fields. Right now I have it set at 78.6 and 214%. And those are the fields I like, but you can adjust those. And once you adjust those inside fields, it'll adjust the outside fields as well. But the 50s will always stay the same. It's just 50% or half of this one times range, this ATR range. And that's exactly what the close is. It's half of the range. But for the most part, you can see how the stock really, when it came in contact with any of the field levels or the ATR levels, it really, let me bring this down. I wanted to show you by candle. But it really had an impact on the stock, or at least where the stock went to. Not necessarily that the stock stops or goes, but it gives you somewhat of a prediction where the stock may or may not go. Where the stock, so it helps you out with your risk reward ratio. And for the most part, you can see right here, once the stock opened up, it bounced down, came back to its previous day closing price and its previous day high right here, and then hit this field right here once it broke back above its open. Hit this field right here, consolidated a little bit, or you could say it started flagging and pushed up from there. It actually paused right here at this fib level, came to the 50% fib of the range between the ATR top and the 1 times ATR. And then from there, you can see how it hit each one of those. It reacted to each one of those field levels. And you can see right now, it actually, this is the high for the moment. And you can see right here, it reacted right here with 2 times ATR. It came down to this field level right here, push back above, or you could say consolidate and push back above, and the stock is trying to make new highs. Some of the other unique features about this indicator, if you haven't watched the video, you can cut off all these bubbles. You can show the previous period bubbles, and that's what you just seen a few moments ago. Show the field bubbles. If you just want the lines and not the field bubbles, then you can actually just cut those bubbles off. Previous period lines, you can cut those lines off for the previous day and previous day high, low, and close. And high ATR lines, those are the yellow lines. Well, we'll hide the outside fields real quick, and you can get a different picture of the stock. You can see right here, this is the actual ATR top between the for the range for the ATR between here, ATR bottom and ATR top, and that's just the top and bottom of the range for ATR. You can see right here, the stock actually pushed into 1 times ATR and then 2 times ATR as well. And that's just cutting the fields off of it. And we'll cut those fields back on and get another picture. But that's what this does. You get all these bubbles over here. You get the period high, period low, and so that's everything the ATR. If you want to know more about that, watch the video I did on the ATR indicator. I'm going to pull it down. I'm going to put the signals indicator on there and go into more depth about this one since I haven't done this one. You can see right off bat, you can see your Nirvana and your Holy Grail. So yeah, I'll put those back in here, but you won't get any of those bubbles or anything. So when I initially did my inside outside bar video, I didn't realize how badly the bubbles can affect being on the screen and affect the user, just being in a way. So I got rid of the bubbles. I actually just exchanged them for the squares and the triangles. So right now, what you see is the first thing you want to notice with the inside outside bars is this. You get this white square ups. It's actually creating one now. So this is an inside bar. Here's your square right here and your square right there at the bottom. So you get 2 squares for an inside bar, and you'll get these triangles for an outside bar. It's just, for me, the outside bars represent volatility. Outside bars make a new high and a new low, and that's why I consider more so a volatility bar versus an inside bar. So, and you'll get those labels as well when those different bars are created. So right now it has a low pressure range. Right now I have it set for the ranges close by close. So it's the difference between the closing prices. So right now this is a low pressure range. It's saying that this close on average is smaller, it's greater than the ranges. Let me slow down. This triangle represents the range between the 2 closes right now because I have it set for close by close. Right now this triangle is telling this range between closes are greater than it has been on average, but the volume is lower than average. But you can see right here, volume is creeping up, so it may go ahead and change and become a regular candle. But it's giving you emphasis that the volume and the range or the VSA volume spread on this candle is not in. They're not in unison. Right now they are. They're both above average. So you have above average range between the 2 closes, and you have above average volume. So they're in unison. So when they're not in unison, you'll get a blue square. This will be above average volume, but the range is below average. And it's telling you there's a pressure there. So that's one of, if you haven't watched my video on VSA, volume spread analysis, or and cooling, this is what I'm referring to when I'm talking about the volume spread. And you can, it's basically, if you read Ann Coolin's book, it's basically saying that market makers are manipulating different stocks. But if they appear in certain areas, especially at the highs or lows of a range, or highs or lows of the day, you can almost predict the turnaround with those, with the triangles and the squares. Rather the high and low pressure ranges. The other thing you get are these VSA. So this right here is a high VSA. So I have it set where whenever the VSA, you get a new volume times the range, you get a new high, or VSA, you get an arrow. And you can see right here, this was a new high for VSA, volume times the range. And you got to push down, but it wasn't able to hold. You can see all these green bars from there where close actually pushed above, but it ran into this resistance area as well. So the Nirvanas, you can see right here, it created another pressure as well area right here, because it could have pulled back, but it continued to push forward, and it actually broke above this resistance area, found some, and made it, once those resistance broken, it becomes support. And you can see how I tested this area here and here. Once the price broke above it, then you had a new VSA, which is volume times the range, and you get this big push up, but you're getting these pressure, high pressure ranges right here, where they're saying that, hey, there's some pushback here, but the stock is actually able to overcome it. And you got this pause right here. You had it tried to push it down, but it couldn't. And then you just enter in all these low volume areas. But this right here, these squares right here, these high pressure ranges, would have been an indication that the stock is overbought or overbought, or that even though the stock is moving upward, there's pressure to push it down. But you can look on these two examples right here that the sellers couldn't push it down, and it actually pushed up. And here's your triangle right here. It's telling you that, hey, the stock is pushing up, but it's pushing up on low volume, and this range is greater than the average if you look at the past 12 bars. And I have this set for 12, I believe. So yeah, I have it set for 12. So that's another incorporation that's in there. I have the bull and bear deviations. These are bull and bear deviations according to price. Let me make those big so you can actually see them a bit better, because that's all they are, just those dots right here. So you can see right here, this is a volatility candle or outside bar where you have the triangle above and below it. I guess you really can't see that either, so I didn't make those bigs, but you can come in here and adjust them how you want to. And there we go. But I named them volatility bars. But you can see right here, you got a square also. So all these things are working in unison or confluence. So this is a high pressure area, and you have a volatility bar as well, and you have bullish divergence in price. When I say bullish divergence in price, I'm meaning that this stock actually made a new low, but the close made a greater high. And that's one of the reasons why I'm considering it a deviation in price, or divergence in price. I should say divergence in price. Because the stock tried to push lower, but the close pushed higher. So that gave you our divergence. And here's your bearish divergence here with this magenta dot right here. And you had a square right here showing this area right here is a pressure area. The stock isn't able to make it go higher or lower. But this one's showing you here, the stock made a new high, but the close is less than the previous close. And that's what you're seeing right here. And this is just a pressure area, and just need to be wary because the stock is pushing up, but they're not able to push it, continue to just go on a random tear up, because there's sellers in this area as well. And you can see right here, you have an inside bar with these two squares right here, and then you have your square on the inside, the blue square, and it's just telling you it's a high pressure area right there. All the labels are in this indicator are right down here. You can see a high pressure range, low pressure range, VSA up, VSA down, bull divergence, bear divergence, volatility bar, inside bar, Nirvana, and Holy Grail. So you can see everything pretty much right there. Here's your Holy Grail, Nirvana. I did a video on my inside outside bar explaining the Holy Grail, Nirvana, and you can see basically the Holy Grail is basically once you get an inside bar, then you get an outside bar. It's just a 2-bar formation, And the Holy Grail is just the opposite. You get an outside bar and an inside bar. In one sense, with this right here, there's a volatility area, and then there's a quiet period, and then you got another volatility area, volatility bar, and the stock is trying to push above, but it can't do anything. You actually got this low volume right here, so I wouldn't expect it to do anything either. But you come back over to your Nirvana, to this quiet period, or this inside bar with this quiet period, where stock is not deciding whether it's going to go up or down. And then you get this volatility bar where you get a new high and a new low, and you stock actually pushed down a little bit, but here's your bullish divergence and push back above. The other thing that's in this signals indicator is my range box. If you're unfamiliar with my range box, that's what's in this indicator as well. And you can adjust that accordingly too. But it'll show you different areas according to the channel indicator, price channel. I think, yeah, I have to set it 12. So if you set this at So if I set this at 12, you can actually see some of the areas where this found support and resistance. If you look right here, you don't have any downward momentum anymore, and that's what gave you a support area. You see right here, this range or this high right here held for the last 12 bars, and that's what gave you your resistance area right here. Or I have a certain percentage of the average for the hold to give you an area of resistance. And that's what these boxes are based off of for your support, possible areas of support and resistance according to the average of the channel. It works pretty good. At least I found that it works pretty good, especially finding some areas of support or reversals. And if we extend the stock out, you can see how it worked out over here on this day right here. The stock pushed down and pushed above, and then it hit this area right here, found resistance. And even though it didn't create a box right here, it created one over here, possibility for the stock to return back to that area. And it didn't, but it's showing you each one of these resistance areas, and that's how these those support and resistance areas are found, or those support and resistance clouds are found or created, I should say. So that's everything that's in that indicator right there, I believe. And you can make different adjustments, and you can change the range. The range right now is set for high for close to close, so it's measuring the ranges between the closes, and it's telling you what one is above average or below average. Well, you can do high low, and that judge the counters by the range between high and low. And you can see you got a different profile for the blue boxes and the triangles. And if you change it to the other one for the bodies, and it's just going to max and minimum, it's really for the bodies. It's going to judge according to the high of the close and the open of the candle. Basically, that's what it's going to judge it by. But that's everything that's in that indicator right there. I like it on close by close. When it comes to the channel indicator is built into this. I'm like I said before, it's by the channel, and right now I have it subject to the looking for areas of flatness in the channel at the top and low individually. But if you're looking for both of them to be flat, you just change to the middle band. And like I said before, if you haven't watched my video on the range box or the last video on the range box, check it out, and I go into more details. And if you would have had on the middle band, it would have gave you a different profile. It would have gave you a range right here. You can see how the stock really respected that range up until it finally broke above. It broke down below, but it broke right back into that range. And right now, you wouldn't have got any of those high ranges, because it's looking for the high of the channel and the low of the channel to both be flat or in unison, or not making a new high and a little low. And you can see right here it's working out pretty good. If we go back to the previous day, you can see how it still found that box right there. and it still found this one right here, there's a low somewhere in there. But it's probably because it's based off of something else. But for the most part, I know it's there. Because if you got this right here, I know it's there. But, and that's the gist of it. But for the most part, this is the signals indicator. And I showed you everything that's in it. In this one, and like I said, you get these warnings right here, especially if it's at the top of the range or something like that. It's telling that the stock is running out of steam and maybe moving up or moving down below, but the stock is running out of steam and could possibly signal a reversal. Same situation with the high pressure ranges right here. These blue boxes is telling that these areas of high pressure. And the stock is trying to move up, but it can't. So it could be signaling that the sellers are in this area right here, and you may want to get out, especially if it's at a top of a range. So, but this really should be a part of my VSA collection, volume spread analysis collection. But if you move it back to how I had it originally, like Ann Coolin uses it, this is what you get. You still got pressure ranges right here. But some of the other ones you don't get. And you can see right here, this move up was on low volume, while the range between high and low was above average. And it's just showing you that, hey, you need to be cautious in this area. And then you got these two squares as well, showing just an inside bar. That it didn't crack above this high of the previous bar. But I go into more depth about my range and the VSA in another video. But let me switch this back to close because that's how I use it. And if you haven't watched my video on the Vwap deviations, this is basically it. All I did with this right here, I added clouds. But I have a free version of this one right here. But on a free version, the clouds will go away if the price breaks above 2 deviations or to the high or low. But in this version right here that I created, the cloud will only show up if the stock breaks above 1 deviation. And if you look right here, you can actually use that as a support area. And until it's actually broken. So I may have stayed in the stock until I found a break below 1 deviation. And anybody who used the V-score indicator, I think Raggi from Simple Trading uses it and really made it popular, at least for me anyway. And I think somebody else uses it as well. But for the most part, this is what they're looking at. They're looking for price being above those, being away from VWAP, and being above or below the deviations to find different areas of turning around or possibly getting in or getting out. And for the most part, you can see right here, this gray line is 5% of 0.5 deviations, I should say, away from VWAP. And this is 1 deviation. This is 1.5 away from deviations away from VWAP, and this higher up is 2 deviations away from VWAP. And that's basically how this cloud works. And you can see right here, it basically stayed in above 1 deviation of VWAP, but it really didn't go above 1.5 deviations of VWAP. And you can see that's basically how it works. And like I said, once it drops below 1 deviation, the cloud will actually go away. And we come back to this area right here, you can actually see where the stock was actually crunching between 2 deviations on both sides, to the upper and to the lower. But the stock decided to rise up and push above. So we can actually just go to this day right here. And you can see how that 0.5 deviations away from VWAP will actually help you out, or it helps me out. But this will be a part of the bundle as well. And you can see right here, like I said, it went above 1 deviation, showed you. So possibly going above 2 deviations, you might want to get out. But that's basically how I use it. and I use them in conjunction together. And I take this off, and we're gonna pay more attention to the volume, relative volume standard deviation. I explained the levels, well, not all the labels. So this is your volume, current volume. Let me just go here. This is your current volume on this candle right here. This is your current volume. This is your average. I have this average set to 12. If you've been following my channel for a while, you know I like to use 12 on a 5-minute chart. 12 bars give you an hour. So, and this is your second period, APR2, just a APR period 2. And I have it set for 16, and I have it set for a day. And I have my volume average is simple. And here's your P2, period 2 volume, period 2 volume average. And right now I have the volume or the price trend, because this colors the price. But let me go through the colors, and then I'll go through the trend. So yellow is above 2 deviations, and it's to the downside. Green is 1 deviation, volume above 1 deviation. Pink is below 1 deviation, but above 0 deviations, but below average. No, pink is above average. It's below 1 deviation, but it's above average volume. So this light green right here is above 1 deviation, and it's above, no, it's below 1 deviation and above average volume. So yeah, this is below 1 deviation, but it's above average volume. This green is above 1 deviation, and it's above average volume. So this dark green and dark red is below 0 or below 1 dB, below. Basically, it's just a very low volume. That's just what these dark green and dark red is. Just real low volume. This white is above 2 deviations volume, and that's where you get the color scheme from. But for the most part, it's all according to whatever trend that you choose. You could choose close by close. If close is greater than the previous close, that'll be your trend. You could change the Heikin-Ashi, and this give you a new trend, a new profile. But the colors of the bars, whether bright green and bright red, or dark green, dark red, be according to volume. But the trend, whether it's green or red or whatever, I just say positive, negative, would be according to the trend. And this is a trend for Heikin-Ashi, and you can just see it's basically all the way green through. So we push it to buy sell pressure. You get a different profile as well. And the buy sell pressure is just stating that if the close is greater than half of the range of the candle, then it'll be positive. But if the close is below half of the range of the candle, how low range of the candle, then it'll be negative. But it helps you out a lot of times for me in spotting reverses when I use the buy sell pressure one. And the hollow 2 is just saying that price needs to be above the previous half candle. So this close, where I say close, is above the previous half of the candle, and it gives you another trend, and you can see how this trend actually worked out as well. So, and it gives you a different profile, and regular is open and close. So if the close is greater than the open of the candle, that's regular. It's just showing you that's the regular price action of red and yellow. Red and green candles. So that's the regular side. You can change the second period. Here's your length. Length 1 is for the current period. Length 2 is for the secondary period. You can change this to any other period that you want to. You can change the volume average type. You can do tick volume or regular volume. Paint bars or don't paint bars. And there's a scanning feature in this as well. And if volume is making new high and it's a bullish candle, You can scan for that. Volume making a new low or a new volume making a new high is a bearish candle. You can scan for that. And same situation with bull scan, and volume is above two deviations. Be the bull scan, and it's positive, and the bear scan be a volume above two deviations, and it's a bearish candle. You can change all those different colors that you're seeing up there as well, and you get it right there, and the explanation for each one. And if a close is equal to half of the candle, it'll be a gray candle. You don't have any gray candles here, but that's pretty much standard setup for all of the. Here's a gray candle right here, where the close was equal to half of the candle. I did that on purpose for that specific reason, and it really goes according to buy sell pressure. But this is just one stock. Another stock, and that's pretty much the features. You have your these other lines that are in here. This shows you the highest volume candle, so you can make a comparison to the next candles. And this other gray line is just 50% of the highest candle. So it just gives you a good estimate on volume comparison to the highest volume candle. And this orange line is just your average. So let's go look at the S&P 500. And I put everything else back on there. I probably should have put everything on there before I switch switch stocks. But for the most part, putting everything back on here. And this is your setup. It can be complicated sometimes, but for the most part, if you're tracking this bar by bar, it's not complicated. You can see right here that all these areas, this is high volume, but these are high pressure candles right here. And you can see the stock trying to make a new high, but it's hitting Vwap above two deviations. You can see an inside bar, then volatile bar, or outside bar where it makes a new high, new low. This is just all pressure, and you can see your resistance area right here as well. This white line was your open, and this green line right here is your day's low. I usually cut these off, and the day high and day low line off, and I really just look at my bubble. Where is it? There we go. And I just really pay more attention to where was the previous day high and the previous day low and the previous day close. And you see right here, here's your previous day high. You can see all of this noise right here, pre-market, all around the previous day's high. And you can see right here, this is when it finally held and it finally pushed above. It stayed on this open. The day's open right here as well. Here's your Holy Grail and your Nirvana as well. And you have a lot of confluence right here. You have an outside bar or a volatility bar, and those are the two triangles right there. You have a new VSA, and it's to the new high volume spread analysis, or volume spread from close by close. And you have a bullish divergence dot as well right there. So that's a lot of confluence right there. It could have given you a good signal to go and enter in this trade. It's also breaking above VWAP as well. So you can see different areas of resistance. You can see how this area right here served as resistance, but VWAP served as support. And you can see all these moves up right here was on low volume. So it's a good indication that, hey, the stock may not continue, or there's exhaustion in this area, so the stock may not go. But you can see all these different areas of resistance and support resistance. And you can see right here, this area came into an area of support, and it dropped down below and started acting as resistance, but it broke back above, hit this area of resistance, paused, pulled back, and it's pushing back above. And right now, you can see right now it just created a nirvana. We gotta wait for this candle to actually end. You can see it created this area of resistance back here as well. So this bundle right here really gives you a nice understanding of confluence. And if you wanted to see what it looked like, let me go back to AI. I should have, like I said, I should have stayed on that stock before I just went to another one. And the other thing about the ATR, these other ATR levels won't pop up unless the stock breaks above the ATR level. So it actually goes up to 5 times ATR. If you look down below, you don't have anything down there right now because stock didn't break below its ATR bottom. And let's go to a higher time frame. This is a lower time frame. You get a lot of noise on this 1 minute chart, but this is the difference. You can see right here, those are those squares, high pressure ranges right here. You can see right there that this was probably an indication there's a turnaround. Then you got all these different lower wicks. So this will be this is a 1 minute chart. And then you got your area of support that popped up as well. So once it's crossed above VWAP, you could have used this box right here as your potential risk area. That if the stock then continue up, it'll probably come back down here. You probably sell it. But if the stock keep going up, this would be a possibility of getting out right here on this red box right here. So that would give you a nice area of confluence and support and resistance. And you can see the ATR levels are the same as well from the 5 minute chart. And you're getting a lot more noise, but hey, it's candle by candle. And that's why I say just take it candle by candle. You can see how the stock pushed down. Here's what I always talk about. You're looking for some area. You're looking for some type of reaction. That's what you got right here. You got a reaction. The stock pushed down, made new VSA. I think on the 1 minute I'm using 15-minute average. But anyway, it made new VSA to push it down. Volume spread to the downside, and then you hit with 2 candles on above 2 deviations of volume, and you have these pressure areas like the blue. Remember, the blue squares stand for these are small ranges but above average volume, and then you got your bullish divergence right here. Bullish divergence with price here. You had a new low but a higher close than the previous close. And then from there, you get the stock to turn around right there. And I have this set for Heikenaishi. That's why it looks that way. But you can actually, like I said before, change this. Let me bring it back. Come over here and change it to close by close, and you'll see the there we go. So it's not actually 2 yellow candles. It's actually a blue candle if you're using close by close. I mean, white candle if you're using close by close. And that gave you an indication that this stock would possibly could push back above. Here's your new VSA. So this VSA, even though this volume, how much volume? So you got 176 over here. You got 178 over here, and the spread is bigger than this candle over here. It's greater volume and a greater spread. So you got your new VSA, which pushed it back above and above 1 deviations on the volume, and it pushed above. So you're looking for some type of reaction at each one of these different levels, or and that's what the signal indicator really does. It helps you see. Sometimes you don't necessarily look down at volume, but you can see the VSA, and you'll see the different squares, or you see the different signals signaling you that there's something off, or there's a possible reversal area. And that's one of the reasons why the signals indicator works out really good when you hit these different areas. You can see right here, you had this push down right here, new VSA, but then you get an inside bar, and then you got the triangle warning you, hey, this range is greater than average, but the volume on it is less than average. And then you got this long low wick down here as well, signaling you, hey, buyers are stepping in. You know, the stock couldn't get pushed down lower, but a possibility it could go up higher, and just wait for a break above this candle. possibly get in and just ride it up to this resistance area using either this low as your risk reward right here in this box. But we'll go to a higher time frame, and this is what it looks like on the daily. I have this set. Let me get rid of my unbalanced volume so we can see this a bit better. Okay. So I have this set on the ATR set on a monthly, and I have it set on 3 months. So you're just looking at it on a quarterly. So that's why I chose 3 months. So it'll just give you a quarterly average. And this is our daily time frame. So I have Vwap on here as well. I have Vwap set to monthly as well. You can see right here is breaking down below or possibly getting oversold according to Vwap. And you had a support area that was made from these two candles right here as well. So it actually pushed back above from there once it got out of the one deviation low. And you see today it created a new VSA high according to I think 13 candles, 16 candles. I have the daily set for 16 candles. The reason why I do that is because there's only 253 days that the stock markets actually open up. And once you multiply that by 25, you're looking for a quarter. And then multiply by 0.25 again, you get 15. But that's basically why I use 16 on a 16-day average for these different indicators on this time period. And this is basically it. You get your ATR bottom right here. It actually broke down below the ATR bottom. And you can see where these were created. And I actually have those other bubbles cut off because it just be too much noise on this daily chart. So that's why those other bubbles are cut off. So you just look for your ATR top and ATR bottom, and you look for your fields in between those. But let's go to the S&P 500, and we can see how these played out. And I do have Fibs on this right now, so I just get rid of those so we can see the actual indicator clear. So I don't know why ThinkorSwim pushes these bubbles ahead like this, but this is not the actual ATR. This is like the current ATR right now. So we're looking at the previous ATR. These two yellow, it may be because it's the end of the month that it pushed these bubbles above forward. But this is the ATR top, ATR bottom and top for the month of March on a quarterly basis, 3 month basis. And you can see on a 3 month basis, this S&P 500 moves $30, and you can see it used up to 93% of the hollow of the ATR, and that's basically $28.01. And right now it's showing you that this push up is on low volume. All this, you can see this low volume. It's pushing up on. And this range is greater than average on 6. The range is greater than average on the 16-day average, and the volume is below average on the 16-day average. This gray background is just showing you 16 bars in from the past is projected into the future. They give you another comparison to where volume was and where it is now. And this right in my period too, like I said before, is all based off of monthly. And right now, this would be your monthly volume right here, and this would be your average month volume right here. Just give you an indication if it's above or below. And we'll go down to a smaller time frame. Here's the 5-minute chart again on the S&P 500. And like I said before, you can see this confluence between the 4 indicators. And you can see it just broke above its ATR top. Here's our hollow range for the today. is $4.17. The regular ATR is $7.14, and it's used 59% of its ATR average true range for this day. And right now it's reaching towards this hot outside field right here, and we're looking for a reaction. Is it going to keep pushing above, or is it going to pause? And we'll zoom in, and you can see it's having a reaction. You can say it's pulling back just a little bit from this field area right here, but you can look back here as ATR top. You can see how it had the reaction where it did, like the bullish bears say, back test, retest. So it just pushed above, retested this area, and then it pushed above. And here's some of your confirmations right here. Here's your volatility candle. It's a high pressure candle, a high volume candle, but smaller than user range on the candle. And you can look right there as well. Here's your bullish deviation dot as well. And you see how the stock is pushing above as well. You can see right here, it's above 2 deviations. So I would expect a pullback somewhere back to the norm of the Vwap. Right now it's pushing above. You can see you got this big candle right here and these two big candles right here. And you had these two pressure areas where the sellers tried to push it down, but buyers pushed it back up. Here's your volatility candle. You would have got in above this candle right here that push above, and it actually created a nirvana as well. And there's your label for the inside bar. And this is basically it. This is the end of the video. This is bundle can be found in my Etsy shop. Just looking at link in the end of the description of the video if you want to get this bundle. It includes the Vwap deviations, the ATR range, the signals indicator, and the relative volume standard deviation. Like I said, you can scan for those different things I'll show you: the bull scan, bear scan, new high scan, you know, whatever. And if you haven't watched my ATR video, you know, that's everything that's in this ATR. I mean, in there, and the signals indicator. I went in through that. You can not show the Holy Grail, take that off. Whatever type of volume you want to use, tick volume versus regular volume, the volume average, the breakouts. The breakouts are basically if it break out above those areas of you might not be able to see it because it might be being covered up. But anyway, anytime it breaks, here's a white candle, right? A white arrow. It's showing that here's your breakout area right there. A breakout out of the box right here on this candle right here. This candle as well. That one right there. It broke out above this box right here. Here's your yellow candle where it broke down below the box. Here's your white candle, and those are just your breakout signals. You got one right here, you just can't see it because I'm creating a new VSA. And well, like I said, this is the end of the video. I hope everything I said here has helped you with your trading, or I hope everything I said has helped you and it brought some type of new perspective into the how to trade and has been worth your time. Like I said before, if you have any questions or anything, leave any comments in the description. I mean, in the comment section. If you haven't already, please like and subscribe. And you can find the indicator in the description of the video. And like always, stay safe out there, and God bless everybody. And thank you again for taking the time to watch the video. God bless.